Good afternoon, everybody, or good evening, or good afternoon, depending on where you're calling or you're joining from. Today, you're going to hear speakers with domain experience in various sectors of finance and private equity, venture capital, and banking. I don't want to talk too much. I know there are a couple of the panelists want to have to leave. But just for some housekeeping, as Crispo said, please, if you're not for the panelists, if you're not speaking, do unmute, but do keep your live video. For everybody else, participants who are not on the panel, please don't leave your video on. Okay. So without further ado, let's begin the panel. This has been a tumultuous year for many businesses around the globe, especially here on a continent that we lack sophisticated financial markets. A lot of entrepreneurs and businesses get some of their financing outside. It's just disrupted supply chains. It has it's just this human calamity. It's just devastated a lot of things in way of life, especially for front-faced businesses, hospitality, that sort of thing. Although there are opportunities, and I'm sure you'll hear from some about potential opportunities that they're working on and going forth. So there's a few people that have to leave early. So what I'll do is, let's have Sangu go first. Sangu, and for the panelists, if you guys can just give us a quick 2 minutes about what you're doing, and then we'll go right into the Q&A. So we have 4 panelists, so let's do that. Give about 2 minutes about what you or your firms do, and then I'll begin the questions. Okay, go ahead, Sangu.
Sure. Thank you, Nee. Great to connect with everyone. So very quickly, wearing 2 hats as representing 2 investment firms, Golden Palm Investments Corporation, that mostly focuses on tech, early stage tech, Pan-African, and Africa Health Holdings, where we focus on healthcare investments, Pan-African. And I would say that on the tech side in particular, even with COVID, in fact, COVID has in some ways accelerated the digital adoption, shifted the curve. And so we've seen incredible outperformance in a lot of the tech portfolios, and we've also been quite active. In the last couple of weeks, we've already concluded to make 2 new investments in tech startups and continue to look at a ton of deal flow. So that's kind of what's been going on there. On the healthcare side, obviously, with all of COVID and everything that's been happening, I'll say in the short term, it's created a lot of suspension of activities to a certain degree, but medium and longer term, I think COVID has really validated the need to have robust, proper, functioning, effective local health infrastructure. So we see this as a great positive. You're on mute, Nee.
Yeah. Thank you for that. Thank you for that. I appreciate it. So let's have Audrey go next. Talk a little bit about your firm and then what you guys are currently doing this calamity.
Okay, thank you very much, Nee, for the invitation. I do appreciate for your invitation to join the panelists to have this conversation, which I find very, very critical in the season in which we see ourselves. So I work for ABSA, formerly Barclays Bank. We are a Pan-African bank with presence in 12 African countries. We are in South Africa, Kenya, Uganda, Mozambique, Zambia, Ghana, Mauritius, Tanzania, Seychelles, and Zambia. We are part of ABSA Group, which is headquartered in South Africa and also listed on the Johannesburg Stock Exchange. In Ghana, we are one of the top most profitable banks with over 100 years experience in corporate and investment banking, business banking, and retail banking. We are SME focused and have been supporting businesses, especially during this COVID season, When the COVID began, it was something that we all did not expect. However, as a responsible bank, we quickly came out with interventions that helped the SMEs, ease them off some level of burdens and also release some funds to them so that they can continue to thrive in their businesses. We engage in a lot of capacity building activities, and then also we offer access to easy financing for these SMEs. I believe that in the course of the discussion, I would briefly highlight some of the financial packages that we have for the SME. So I am the head of SME. I'm responsible for financial inclusion. I'm responsible for startups, and then also the SME community in ABSA.
Great, thank you for that, Audrey. Let's have Anna-Luca go first or next. And once again, just give us a brief about what you're doing and what you and your firm are doing in this calamity.
Hi, Nee, and hello, everybody. My name's Anna-Luca, and I head up investments at the Sagana Group for the Middle East, North Africa, and Africa. And the Sagana Group is an impact investor. And so what we do is we take an impact first approach. We invest across sectors: healthcare, education, financial technology, renewables, and sustainable fashion. And we also focus on agriculture. And we also do not take, so we're not early stage, we're not venture capitalists, and we're not private equity, we encompass all. So anything from early to growth, depending on the impact mandate. And also we don't just invest equity, so we are sort of what we call direct and indirect equity players, as well as everything in between, from mezzanine finance to credit players. And my focus within this is really impact investing. So for the last 5 years or so, I have focused predominantly myself on financial technology, financial inclusion, and anything from what I call entrepreneurship and migration. So within migration, that would entail SME financing, that will entail education, healthcare, and the like. And so I'm hoping today to come from that perspective as we have this discourse, which is most needed at this time. Thanks, Nee.
Great, thank you, Anna-Luca, appreciate that. And she's calling in from London, and I believe you have to go a little bit early, so we'll wrap this up. So last but not least, go to a friend, Jerry. Jerry, I've known you for almost, 15 plus years when we overlapped in grad school. So Jerry, I'll let you take it from there. So.
Good evening, everyone, and thank you, Ahaspora, for having me. I should actually be a member of Ahaspora officially, being a returnee myself. So just very quickly about me, my passion really is about helping businesses to drive economic growth in Africa, because I believe in businesses, especially SMEs, as a big driver for economic growth. That's what led me to co-found Injaro Investments, which is a private capital management firm. We currently manage an equity fund and a credit fund. These funds invest in agricultural SMEs, trying to improve the lives of smallholders and people living in rural areas. The work we've done over the last 10 or so years has benefited close to 3 million smallholder farmers and people on low incomes in Africa. The work we've done over the last 10 years has also given me the opportunity to interact with I'd say hundreds of small businesses in different stages of development, in different circumstances, with their own versions of uncertainty that we've had to deal with, especially for those that happen to be in our portfolio. So based on that, I hope that I have a lot of valuable insights to share. Thank you.
Thank you, Jerry. Appreciate that. So let me get this, let me ask you a few questions, and then I'll open up in the next about 10 minutes, and then I know Sengu and Luca, you guys have to leave in about 35 or so minutes. So I want to keep enough time for people to ask questions, okay? So, so the questions, so this goes out to all the panelists, and I think probably it's going to, relate to probably one or two, but so what type of financial instruments are you guys using to support current clients? I know, for instance, some of the DFIs like IFC and Norfund and CDC, they've given their current portfolio or their current clients some windows for financing, or they've so what types of opportunities or what types of instruments are you guys doing to support your clients? Anybody can answer, and then we'll go from there.
Nee, if I may, so that we pitch this at the right level, I don't know if the poll button is working or the chat. It would be great to know how many people are familiar, cognizant with financial terms, so we know where to pitch the level of discussion. Sure.
I think it varies. So you have early stage, you have people running medium-sized businesses, you have people who are running family-owned businesses. So try to keep it lay terms, and then obviously if somebody has questions, I'm sure they'll put in a chat.
Perfect. I would love to, I'm going to be a little bit controversial and adversarial and call on my colleague Jerry, who I've known for quite some time and I've worked with over the years, because I love what Jerry does, right? So Jerry, you didn't, as far as I'm concerned, you didn't big up yourself, right? What Jerry's firm does is essentially really is grassroots, roll up their sleeves, unlike the likes of us that sit in London, and go down to these businesses and really support with technical assistance and everything else, as well as funding to see this businesses scale. So I would love to hear from Jerry on what you're seeing on the ground and how you are seeing what instrument you're using. Are you seeing that you're changing your approach at all? And how relevant are you seeing that your approach over the last 10 years is more so now?
Thank you for putting me on the spot, Anelika. So what I'd say is that we actually aren't doing much differently from what we've done over the last 10 years, because by focusing on agriculture and agricultural SMEs, we've always been targeting an underserved and underloved sector. So we've always used a healthy dose of, I'd say, quasi-equity, but on easy terms where we're flexible around repayment. So even if there's something that is masquerading as debt, we actually manage it more like it's equity. We're very understanding of the business cycles, the challenges faced by the companies that we invest in, and we do sit alongside them to support them through their growth. So what this means is it's not only about deploying a financial instrument, it's really about understanding the underlying business that the business founder is in, and the challenges that they face, and working with them to face those challenges. To share a few anecdotes, one of the things that we found with some of our small agri-businesses is that they're probably what you would call anti-fragile. In other words, they seem to be performing actually better in the current situation. And probably this is an element that people need to be aware of. There are some businesses, because of what they do, producing food, for instance, the demand for their products will stay flat or possibly increase as people stay indoors and snack a bit more, etc. So, I mean, without trying to make this sound too simplistic, we haven't changed what we do. It's all about trying to understand the underlying risk and structuring financial instruments that make sense for the business cycle of the companies that we're targeting. Now, maybe for companies that are not in the agriculture sector, in uncertain times like this, if you're trying to unlock capital, because I think it's very important to think also in terms of what the businesses must do to attract capital. At this point in time, most financiers sensibly will be sitting on their hands, waiting to see what happens. But if you're on the hopefully receiving side of the capital, what do you do to ensure that you improve your chances of raising money? And this would be along the lines of, firstly, articulating how your business is better positioned to benefit from some of these downsides, either to not go down or to actually rebound stronger under the circumstances. You need to understand this, and you need to be able to communicate this clearly, because with a high level of uncertainty, investors find it harder to forecast what is likely to happen from a financial perspective. So the more you can make it easier for them to trust in your business model and how resilient it is, the easier it will be to raise the capital. We have some portfolio companies that are looking to raise capital now and actually are quite close to raising capital. And this is one of the things that they've been able to do. So I think I'll pause here so I don't use up all the airtime. Thank you.
Great. Thank you for that, Jerry. Audrey, I'm going to go right to you. You deal with really at the bottom of, you know, what I won't say bottom end pyramid, but you deal with the average, you know, SME or your mom and pop SME, utilizing financial innovations such, and you're using your balance sheet to provide unsecured debt. Could you go a little bit into that? You mentioned a little bit about that. I know about it, but tell us how you guys are supporting small business owners right now, and how you're using your balance sheet to support that.
Okay, so ABSA has a goal to grow with SMEs in this country. And over the past 3 to 4 years, we have extensively supported the SME community in this country. How are we facilitating their growth? Number one, we are very much aware that SMEs have the challenge of accessing finance from financial institutions, you know, because of the various criteria and requirements that sometimes it's difficult for them to meet. But as a bank, and a responsible one, as I might say, we noticed that, you know, it was becoming very difficult for SMEs to really access funds from us. So we had to relax some of our requirements and make it so easy and simple for them to approach us and get the support that they require. So currently, as I speak to you, we have designed a unique product for SMEs, and it's an unsecured facility we offer them. So we are able to offer them from 50,000 to 500,000 without collateral. Without collateral, because we know that most SMEs find it so tough to really acquire landed property or even secure cash for their facility. Some banks will require that they provide cash security or a landed property for to collateralize their facility. So we have taken that off, and all the SME has to do is to tender in their request in writing, indicate how much they want, and then also what they are going to use the facility for. In most cases, this facility has been designed to support their working capital, and it is for a tenor of 12 months. However, you can take the facility and pay within 3 months, depending on your own arrangements. And some of the things that we look out for to be able to take decision on this facility is that we assess the customer's credit turnover over a time, over a period. And once you have satisfactorily operated your accounts, we look at your averages and then determine how much you can access based on your financial performance. And as an SME, if you want to approach us for any facility, I just want to give you 2 or 3 key things that you should be mindful of. Number one, you have to ensure that you don't have any bad credit history from any bank. And then also, you don't issue that checks. Some SMEs issue that checks, and as a result of that, they destroy their records. So it makes it so difficult to take decisions, whenever they come in to access finance. And then also to ensure that your business has run for at least 3 years. However, if your business has run for less than 3 years, let's say 2 years, we can look at it exceptionally and take a decision on, supporting your business. But beyond the access to finance, I want to say that we also have a robust capacity building program in place to upskill these businessmen and women, because most of them are informal and they are not formally structured. Because of that, they are not able to scale their business to the level that you would want to see their businesses to grow. So we have a robust program in place, and we ensure that on month, we organize such seminars and training to enable them to engage in proper business practices and governance.
Great, thank you. Sengu.
If I may, I would like
sure.
to,
go ahead,
because I put Jerry on the spot, but then I didn't.
Go for it, please, go for it.
Thank you. So as I mentioned, with what we do, we focus on early stage as well as growth. So I wanted to speak about what we are seeing on both fronts. So for early stage, we focus predominantly on equity. It may start with a convertible note and then we seek to then follow on. But then on the growth, in the growth element, nothing has changed. You know, we haven't seen COVID change the business model. You know, we take quasi-equity stake or a typical put in credit, so debt into businesses. But then again, because we're somewhat far removed from businesses, we tend to be somewhat risk averse in that regard. And so we compensate for that by putting in some technical assistance. Now, I mentioned that we are impact first. And so when it comes to technical assistance, we need to ensure that we tie it to the objectives of deepening impact in some regard, be it reaching those who are underserved, areas of a business. So areas that a business wouldn't necessarily seek to service based on the stage of growth they are. So essentially, it acts as a sort of incentive in getting businesses to serve a specific demographic in a way that we think would be more meaningful and impactful. I also mentioned indirect investing. So we invest in funds. I also mentioned that within that, SME funds are, we invest in SME funds. I wanted to mention something that we are seeing on the SME funds part. We're seeing a number of interesting I would call it a mixed tools emerging. So I'll give you an example. With one of the SME funds we invested in the Middle East, we have seen a very interesting tool, which is an instrument that has 3 components. So there is a minority stake taken in the business, and then you have the typical liquidating debt element, as well as a revenue sharing element. And then these SME funds are bringing these 3 elements together to try and circumvent the need for collateral. Because Audrey mentioned that, a challenge with SMEs is, again, when banks, seek to be risk, calibrate the risk appetite, they will seek to have high levels of collateral against their lending. So with the SME funds that we invest in, we're seeing that they're able to reduce that burden by putting in this sort of tool that has multiple elements, a revenue sharing component, the intermediated credit component, as well as a minority equity stake. Now, I would also want to mention that for SME funds, another thing that we are seeing that we would say is crucial in being able to enable these businesses scale or deepen their, their target segment is technical assistance, helping them, supporting business development, business support. A lot of these businesses may not, be savvy in some elements. So when we come in, we assess the businesses and see where we feel business support would be relevant in enabling them deepen their service to the segment that they serve.
Great, thank you for that. Really good addition and segue into my next question. And Sengu, I'm going to give this one to you. You had mentioned actually in some of your, a lot of people don't know that you've actually invested in, besides Pharma, you've also investments across the board in Della, a couple other well-known companies. You mentioned something, and maybe I got it wrong. You said that you've actually seen, or you've seen acceleration of the digital businesses or consumer internet type of businesses. Can you talk a little bit more about that? And also, what's other types of support are you supporting people like Pharma? I'm a subscriber to their pharmacy here in Ghana, so I love their service. Go ahead.
Yeah, no. So two quick, very short stories to make the point. There is when I was in a group called at Goldman Sachs, the Special Situations Group, and one of the things we used to do in SSG was the world could be blowing up. There's something crazy going on, and immediately something crazy goes on. The SSG team will just come together, and it's basically like, okay, there's opportunity here. Any given moment, something bad is happening. No matter what is happening, there's going to be an opportunity. So like one of the big things SSG had done was when there was a huge crisis in Southeast Asia, they were able, they run the analytics and realize that, all right, golf courses, where the real estate for golf courses had dropped so far, and went and scooped up a bunch of them in Japan and made billions doing that, right? And so that's one short story that's always stuck with me. The second thing was Coca-Cola sales, right, in several African countries during civil wars and civil conflict was still ongoing, and I never understood that. And I met, he's no longer there, Alex Cummins was an African senior executive at Coca-Cola. I was on a flight with him one time and just asked him this question. I was like, how are you guys able to make money in the middle of a bloody civil war? And he said something that I'll never forget, where he said, because across the value chain, we've created a situation where Coke, once it leaves, you know, from the factory all until you get it and you open it and drink it, everyone makes money across the board. So they've created that opportunity in the supply chain that everybody across the board is able to make something. And that's how, you know, I've been to communities that don't have clean water and they have Coke, right? So those two stories to me bring this opportunity where, like Churchill said, never let a good crisis go to waste. And I think the one thing that COVID has done has, for the first time, created this massive shift in the digital adoption curve. Everyone has to go digital. My father, who resisted technology for like his entire life, was forced to go digital, right? He was forced to figure out how to use an iPad to be able to do his work and to just use a computer. And so what we've seen, what I've seen in the portfolio is tech-enabled businesses are now having incredible opportunities to expand and grow at rates that they couldn't do before. M-Pharma, for example, was able to take advantage of this crisis and use this technology and use this supply chain to suddenly figure out that, okay, I mean, its business model is we use technology to aggregate demand and then we order at scale. And they realized that African countries are facing this issue with PPEs, right? Because, you know, Gabon doesn't have the scale to be able to go to China and negotiate for PPEs when it's facing off against countries like France. So they said, let's use the same technology to do this on the PPE side. And so we'll aggregate all the different African countries and say, let's get the demand. And instead of just ordering 200,000 pieces for Gabon, if you can get 10 different African countries and pull them together, you can now order at a scale that would rival what France and other countries would do. And then they were able to take advantage also of what was going on and helping a lot of these countries develop molecular diagnostic capability. So huge opportunity there. Flutterwave, another portfolio company we saw that, look, everyone has to move e-commerce, right? So they literally put out a free product to enable a lot of these shops that don't have the capabilities to lay on an e-commerce layer. They provided that for free. And then of course their technology will power the payment. So it spurred this whole new business, whole new innovation. On the healthcare side, the telemedicine platform, which before just had a trickle of people using it, we saw a 20 to 25x jump in usage, right? Where suddenly people were now very happy to use telemedicine and to do virtual consultation with doctors. And so you're really seeing on the tech side, you're continuing to see a lot of deals being done. I mentioned in the last few weeks alone, we've done 2 deals. And from a deal flow perspective, I'm seeing incredible opportunity from people who are taking this massive shift in digital and are offering opportunities to say, hey, these are business models that can come around. So the other thing also is, if you're able to build a business that can just survive, it becomes a huge factor. As JP had mentioned, he spoke about how, you know, capital providers kind of suspended capital stuff in the beginning, which was true. But then after a while, guess what? If you're running a fund, if you're running any of this stuff, you have to deploy capital. You can't, like, we don't know when COVID is going to get figured out, and we can't sit for the next 3 years and say we're not going to invest. We have to deploy capital. We have to put a return on that capital. And so I think that this is actually a very interesting opportunity. If you have businesses where there's a clear sense where you can be profitable, or businesses that can take advantage of this adoption curve shift, it's in a counterintuitive way. This is actually a great opportunity for you to go out, raise capital, do the damn thing, and never let a good crisis go to waste.
Great. Thank you for that, Sangu. I'm going to open up the questions, but before that, I want to add just a quick comment to what Sangu was saying. You know, this is a pandemic. This is a healthcare pandemic. I remember during the financial crisis, 2008, 2009, even though that didn't really touch the continent well, as much as it did the West and in the UK there are a lot of companies at that time that came to become unicorns, companies like Uber and Airbnb. All these companies, those are more unicorn stories, but there are people who saw an opportunity and they started to make money from that. And I think right now you're seeing the same thing as Sangu was saying. So let's do this. We have about 20 minutes left before two of our distinguished guests have to leave. Jerry and Audrey are going to be around. So let's do this. So if anybody has any pressing questions for Sangu or Ana Luca, please ask them now or to any other panelists. Two will have to leave in 20 and the other two are going to be here for the next 45 minutes or so. So any questions from the audience?
If I may start while people are thinking, thank you very much to all our speakers so far. I'm not a finance person and I'm not an entrepreneur, so this is not my space, but I do interact a lot with people who are in the question is how. So Sangu, I'm picking actually from the very insightful things you said. You gave us that kind of go get it mantra, which is amazing and very impressive, but how? If you can break it down for our small and medium businesses, would greatly appreciate it. Thank you.
Sure. So I think it boils down to just drilling down into where the opportunity is and how you can pivot your business model. So I'm going to use what we did at Revita as a case study, right? The lockdown comes in place. We have a situation where patients physically cannot come to a lot of our locations, right? And most of our locations that, even though we have 19 locations across the country now, we have 70% of our revenues probably still coming from Accra and Kumasi, which is affected by that lockdown. So you have a very serious situation where in the middle of this, and you're dealing with healthcare workers who are literally putting their lives on the line. So it's not like you can, the moral and ethical issues we're now saying you're gonna just start laying people off, right? So you're caught in this weird situation where what do you do? And I think one of the innovative things we came up with then was to say, okay, how do we service our clients, our patients in a time like this? Okay, let's map out that experience and figure out where we can use digital. And so it literally doing a virtual consultation with it. So we mirrored what happens when you go see a doctor. You come see the doctor, you say, oh, doctor, my head is paining me and this and that. And the doctor will listen to you, take notes. And the doctor says, okay, you know what? Go do a lab, let's run these tests, let's figure out what's going on. Maybe it might be an infection. You go and do the test, and then they'll look at the results and say, yes, you have a bacterial infection, go take amoxicillin. So we mirrored that digitally, where we said, okay, if you can't come to the place, how can we serve you? All right, you do this virtual consultation, the doctor will ask you the same questions. Then how'd you do the lab? So that's when we then came up with the idea on literally, we send lab tech guys on bikes, right? So they'll take their bikes, the GPS come to wherever you are, they'll take your samples, and then we'll run it in the lab, and then we'll electronically send the results. And then the doctor will prescribe and say, okay, you need to get amoxicillin, and we'll drop that off for you. So we're able to take being forced to go digital to now create workarounds that figure out the logistics and the tech of that. But what that has actually created as a result of that is an incredible whole new business. Because beyond now that the lockdown has been lifted, people are loving the business. People are like, why am I going to go to a hospital, like clinic, and be waiting? I'll see the doctor, and I'm sitting down waiting for like 2-3 hours for the lab to be done. So we've almost effectively created a concierge, tech-enabled healthcare business where it's like, we'll come to you wherever you are, right? And people love it. You can be in your office,
Okay.
you can be at home and get that service. So that's one example, I think, of how you really need to just break down the business into exactly what you're doing, map out that process, and figure out where can you actually use technology to accelerate, amplify, and carry out some of what you're doing. So take that offline experience and figure out the ways in which you can do that virtually, online, a hybrid model.
Great. Hey, Sangu, I got a question for you. It's from Gautama. It says, Sangu highlighted the role technology can play in business and enterprise in the world today. How effective is technology as as a disruptive force in Africa where almost half the population is offline? That's a very good question. So basically, you know, how do you do business when, you know, the cost of bandwidth is so bloody expensive?
So look, there are real issues, right? This is not to deny that we don't have issues with connectivity, or we don't have issues with the high cost of broadband data, or we don't have issues with infrastructure. Yes, there are those issues. But are you going to look at it glass half full, glass half empty? What we also know is we have 535 million Africans that are online, okay? That number was about 450 million 2 years ago, which means in the last 2 years, we've had 100 million Africans come online, right? On top of that, we've also seen massive acceleration in the sort of investments that we've seen in infrastructure and broadband. Broadband speeds increasing. The data cost, while still high, you're starting to see that taper down a bit in certain places. You're starting to see the impact of that. Look, if you look at our mobile, we have over 1 billion mobile subscribers. Over 1 billion mobile subscribers. And what that has created is a platform from which you can build upon that and do lots of very interesting things. So a lot of times the disruption that we talk about is not just, it doesn't have to be the super sophisticated disruption, right? Some of it can actually, it doesn't always have to be app-based, smartphone-based, but some of this disruption will leverage that mobile base that you have. And that's why fintech in particular, we find extremely interesting. One of the places where you know, we're investing a lot on is in fintech, because we see a huge opportunity to kind of build on that layer, that mobile-based layer, where you can do a lot of interesting things on insurance. Tech could be quite interesting, and a lot of other verticals in the fintech place where you can just leverage off that existing distribution effectively that you have. I was having a chat with a good friend who runs a pension business, and they rolled out a retail product, and he was just telling me how just off this digital retail product in a short period of time has already become top 10 funds in Ghana today in terms of assets under management. And this is because you already have that existing infrastructure. And so the truth is, even from an offline perspective, right, the people who are offline are not the people who can afford a lot of stuff offline anyway, right? So it's not as if we don't have those same conversations when we're talking about offline businesses. No one will sit at Nyaho's expansion and say, well, Nyaho, why are you expanding when the guy in Pig Farm can afford you, right? Nyaho is still going to, so why do we have those conversations when it comes to tech? Like, why wouldn't I build a business when I have 550 million people online and I'm, you know, there's no point in this. You'll never, no business, no vertical, no sector will be able to capture 100% of the population. But we have over 500 million people online. And it's an incredible market, and it's a ripe market, and we're seeing lots of businesses build great, fantastic businesses tapping into it.
Yeah, yeah.
And to add to,
go ahead.
I'd love to add to this. Right. So I spend a lot of time thinking about serving the bottom of the pyramid, those who are, who are underserved, put it that way. And yes, we know that access continues to be a challenge. We know that the main barriers to getting online for those who are considered to be in abject poverty remains lack of internet-enabled devices, digital literacy, as well as the data costs. Now, even though we're seeing, as Sangu said, data, more people are coming online, data costs still remain high, although lower than compared to, sort of 5, 10, 3 years ago. But the only thing that will lead to change in this area, to be honest, is competition and regulation. Right? So we have infrastructure barriers, and we can begin to take this towards the political element, but these are big behemoth problems. But at the same time, we have to think about the private sector and the fact that competition will be created by a number of these things we're mentioning, right? Private sector development, proliferation, call it the middle class, call it whatever you want. The more people are getting online, and the bigger the middle segment gets, the more we're able to drive that competition. Competition and regulation will be key in serving the segments that you mentioned in your question.
Great.
If I may also add to that, assuming that offline means not having access to broadband internet or mobile internet, There are also technologies like USSD that do not rely on the internet. They're still linked to the mobile networks, but they do not rely on the internet. And these technologies enable you to access the other half of the population if that is your focus. So just echoing what Sangu said in terms of not thinking about everything in terms of glass half empty, but rather glass half full, because there's an opportunity everywhere if you really put your mind to it. Probably I should segue a little bit to the next question, if you don't mind, Dee.
Yeah, it's broad. I asked that person to be specific. Go ahead.
How else can an SME raise money? You can speak to a firm like Injaro. You can speak to a firm like Sangu's. We all have capital that is targeted at SMEs. But I think it's worth me mentioning that here in Ghana, the government is also working with the MasterCard Foundation. So the MBSSI is working with the MasterCard Foundation to offer, I'd say what they call, they're deploying a recovery and relief program, which has soft loans for companies that have been affected by COVID. I don't know the URL off the top of my head, but if you go to the MBSSI website, if you do MBSSI plus MasterCard plus COVID relief, it should give you the URL where you can go online and apply for these facilities. So I'm thinking about how we solve the immediate problems that SMEs might have. So that could be one place to go where you get a soft loan, which you can supplement with your ABSA facility, which is likely to be a bit more expensive through no fault of theirs. But I think these are some of the avenues that people can follow. And besides the MasterCard Foundation, do a search for COVID relief funds. There are a lot of organizations that are trying to offer these types of facilities for small businesses. And I think finally, I should mention also that you should try looking for other private equity funds that target SMEs. There are quite a few operating in Ghana. There's IMP, there's Acumen, there's Oasis Capital, just to name a few. These are very easy to find if you Google or go to the AFCA Venture Capital and Private Equity website. You find quite a few. Hopefully that should help a bit. Thanks.
Great, thank you.
So I think, Annie, let me also add on. I know the last speaker mentioned that they can also come to us. I wouldn't say that our facilities are that expensive, compared to some of the other small banks that, usually SMEs would contact. So I think that we are also available. And like I indicated, we have a very simple, and easy access to funding. So if they need support, they can contact us and then we'll walk them through the process. If they're already an existing customers, it's even easy. If they are not existing customers, obviously we would want to have a relationship with them for at least 6 months and observe their account performance with us. And just to also add on to the digital discussion, I think that with the emergence of COVID, engaging in technology or utilizing technology to run your business is no longer an option now. It's just like it's become a mandatory because that is the trend and that is the order of the day. It would help businesses to also manage their finances very well and able to, have their turnovers or cash sales and cash flows move straight into the financial system. If you come to our bank, for example, we are making it very easy for businesses to really transact with us. We have our internet banking, we have our Momo platforms, we have other digital platforms that enable these SMEs to really transact, easily with us and at a very convenient, at their own convenience, which I think that they should take advantage of and utilize it to run their business account effectively so that they can actually benefit from some of the support that we have available for them.
Thank you for that. We have somebody from the Middle East. Georgina, do you want to talk? You want to unmute?
Hey, thank you. I think my question's been partly answered, but it was more around so for those of you who are in a position to be lending to SMEs, etc., what are you doing differently considering a prolonged period of uncertainty? We've obviously had COVID. We don't know when that will end. We have elections coming. God knows what 2021 has in store, hopefully good things. But as someone who owns a small business, it's kind of difficult not knowing the future, and what's the support given in that situation?
Yeah. So Jerry sort of, I'll let maybe Jerry and Audrey maybe add to this, but Jerry mentioned a few windows, MBSI, which our friend Cristobal, our friend runs. Is that, Cristobal, is that?
It's COSI,
Yes,
COSI Yankee IA.
I'll
Yeah.
put the website in the chat box.
Yeah, yeah.
We had
So,
her on the previous event, and she gave us some tips as well, so that was good.
yeah, yeah. So maybe Jerry, you want to just
Before Jerry goes in, because I need to hop in 2 minutes.
okay.
But
Go ahead. Go ahead. You want to say something?
Yeah, I just want to say something real quick to Hop. So the first thing I'll say is I think because of there's a lot of democratization with technology and fundraising now, where you can actually, especially for SMEs and stuff. So you see a lot of this happening in the US and Europe, but I think there's a huge opportunity for you to do that in Africa as well, which is being able to leverage. So if you're a small business and figuring out some way that you can do some crowdfunding, there are lots of people out there. So even if it's not, you know, JP's fund, there are actually lots of individuals that are figuring out how can we support small businesses during this crisis. You've seen a lot of this happen in the US. So I think that's something just to be thoughtful about. One of the things that Kaimi did, Frida did incredibly well was, you know, telling and really doing a great job of telling her story of how she's surviving this. And it added so much plus to her brand. I've had a ton of people hit me up from the US saying, hey, if you're coming, buy me Kaimi, because they heard about the story that, oh, she didn't lay off employees, and she's, you know, so that's something that I think is also a great thing, being able to figure out how you can use this time, if there's downtime, to really tell your story and to use the power of digital. And finally, the last thing I'll say is hustle. And so, like, there's with the internet, with Google, there are programs out there. I just spoke to a friend who raised $10 million. She hit up 375 investors and had 362 no's, right? That's why she raised 10 million, because it was just, she was just like, all right, another no, let's keep going, let's keep going, let's keep going. And I think there is, at the end of the day, there has to be, if you want to win and survive and get out there, you need to, you know, move aside all the shame and whatever, go on LinkedIn, Google, hit up people, cold email, cold call, hustle.
All right. Thank you. And that's well said. Sengo, I know you have to run. I'll be in touch, by the way. We need to chat. So thank you for that. Hey, I know there's one more person that needs to go. And Luca?
Yes, just my last two comments, if I may.
Yeah, go ahead. I know you have to leave soon, so please say what you have to say, and then any comments, please.
Yes, so just on that last point, you know, I agree with all that Sangu said. You know, I can't count the number of LinkedIn requests I get per week with proposals, you know, and I welcome them, because this is, as Sangu said, information has been democratized. You know, you have access. Once you can get on LinkedIn, you can connect with people, because connectivity is power, right? You could get 365 no's and then 2 yeses. So it's important to do so. And I think it's also important to be knowledgeable, to become more knowledgeable. There's a lot of information online, freely available information. Jerry mentioned going on the AFCA website for some information. There's information about funds, who's doing what you need to provide as well. Because one of the challenges we've seen when we look at SME funds and then we delve deeper is informational asymmetry creates that mispricing of risk, right? Inability to price properly. And so it's important that you package yourself well, that your numbers are there. You know, there's a lot of discussion around which accounts are you showing, how much do we need to discount what's being shown. All of that's important, that you are able to stand credibly behind your numbers, and that you have your business plan and your strategy type that you're confident in. That's what I'd say. The last thing I'd end with is, you know, for me as a dollar, you know, we're a dollar investor. I continue to be an advocate for local currency funding, because I think that that's a game changer. You know, you see how Africa continues to sit at the receiving end of tailwinds that come from the West. And, you know, until we get to a point where we are able to look at returns on a net basis, CD for CD, we still won't be where we need to be. So I'll just end there. Thanks a lot, Nee, and thank you, Ahaspora, for having me. Thank you.
Thank you for sharing your thoughts and your experience. We really are glad to have you. Take care.
So should I add to that, Nee?
Yes, please. I think there are a couple. Yeah, please, Jerry.
Unless there are a couple of new questions, but
No.
Yeah.
Go ahead.
So distilling the sentiments expressed by Sangu and Anulika, the first thing is the mindset. You've got to believe that no matter how tough the crisis is, there's got to be an opportunity in there somewhere. And this is a fact. Even the most basic saying is that one man's meat is another man's poison. In this downturn, some people have made more money than they ever thought they would because their businesses happen to be positioned to benefit from the circumstances surrounding the downturn, right? This is or the pandemic. This pandemic is one that has militated against anything that depends on mass movement of people, mass congregation of people, and I'd say face-to-face interaction, right? So anything that can thrive on the absence of these elements could be a good business opportunity. If that element is not part of your business, you should think about how you include those elements in your business, as we heard in the case of the healthcare business. In Ghana, there are many companies that produce food. They just produce catering. They're just catering businesses that produce food for casual consumption. Those that had already built an online purchasing capability and e-commerce capability pre-COVID, barely fine. They saw a little downturn in their business, but they did not suffer as much as those who did not build this. However, pre-pandemic, those businesses might have looked a little silly because people would say, well, with all these people driving around and picking up food, why do you need an online delivery service? I actually have a friend who runs a business who did exactly this. He was feverishly building an online delivery platform in the second half of 2019. He knew nothing about COVID. But come January, February, he suddenly looked like a genius for building this application. And I think this comes from proactively trying to build a resilient business that can benefit from the downturns. And it's not always easy to do, but it's worth thinking about. I think for every business that you're running, you should also think about the things that can go wrong and have a plan for what you do when things go wrong. And I'm not talking about simply, very lightly thinking about things that can go wrong. Oh, maybe I'll lose 20% of my revenues. Really think about something systemic that can go wrong and ask yourself, how would my business survive this? In larger companies, this is akin to having a disaster recovery plan. Businesses like mine are required to have a disaster recovery plan. What happens if no one can go into the office? What happens if there's an earthquake? What happens if your server hosting company loses your data? And because we are required to do this sort of thing as part of our normal course of business, the pandemic barely registered for us in terms of disruption. Overnight, we're simply able to say, everybody will go work from home. We barely needed to change anything. So we all need to think, whether we're a small business or a big business, we are a business. Let's think about our business in terms of a disaster recovery approach, worst case scenario approach, and actually spend time, because we did have to spend time thinking about how we survive these situations. And once you've got these plans for surviving a downturn, especially now if you're trying to raise capital, like Kaime did, communicate your plan. Communicate the merits of your business in terms of how it helps other people, how it can make money. And there may be elements of your business that may appeal to people either from a financial or from a non-financial perspective. Make a lot of noise about it. Get out on social media, LinkedIn, try to get on CNN like Kaime did. And get your story out there, because it might resonate with someone and they'll be willing to come through and help out with money. The fourth point I'd make is listening to Sango, you can tell he's a type of investor that would go looking for opportunity in a crisis. This is what value investors do. This is what contrarian investors do. Actively seek out these types of investors and engage with them. 300 investors, don't worry if you get all the no's, someone will definitely say yes. And the final point I'd make is, especially in a situation like we're in now, is when you do engage with those investors, now is not the time to be inflexible about the valuation of your company. This is a time to ensure that you get the capital you need to survive. the capital you need to give you a chance of thriving in the next 3, 4, 5 years. So if you do come across those investors and you engage them in discussions, as much as possible, try to be flexible. It's more important to have the option of being able to survive than it is to get the right or the right valuation or your dream valuation. So I think I'll pause there and see if there are any other questions. Thank you.
Sure. Jerry, thank you for that. It's actually a good segue to, you talked about disaster recovery. To me, it's scenario planning, but you could do all the scenario planning and this disaster recovery, you can, but how do you prepare for a pandemic? I mean, nobody, if you and I had a conversation last year and I would tell you global supply chains will be locked, nobody will be able to travel, you would have said, you're crazy. So, which goes to what you were saying, technical assistance, business plan, that sort of thing. Audrey, this is for you. I think one of the criteria or conditions you have for somebody to get, Audrey, are you with us?
Yes, Lee, I'm here.
Okay, good. So I believe with, I still think you guys are Barclays. So I think one of the conditions you guys have for APSA is to get that loan, to get that financing. There's a set of conditions, and one of those conditions being, besides the historical finance, the cash flow, the P&L, all the financial statements, you require that potential customers, I believe, get technical assistance. Could you talk a little bit more about that technical assistance? Because oftentimes I hear in the past entrepreneurs say we need financing. Everybody thinks they need financing, but once you start to talk to them, it could be simple thing as invoice financing, or some kind of a purchase agreement, things like that. So if you could talk a little bit more about that, so people don't know these type of terms.
Okay, so you rightly said, in most cases, anytime you engage SMEs, one of the first things that will come up would be, we need access to funding. However, as you engage them, you get to know that they need something more than access to funding. Because like I indicated earlier on, most of these SMEs are informal and they are actually not properly structured. So we actually get into identifying some of their skill gaps. And one of the things that most of them are lagging behind is their financial management, okay? Because we can give you up to 500,000. We will not require a 3-year audited account. However, you get to a point where you want to scale your business and you would need funding that is beyond the 500,000, which would therefore require that you would present to us a proper audited account. Most of them, don't actually engage the services of these auditors, or they don't also outsource these services to third parties to support them in that area. So we try to educate financial matters, and then how to properly keep their finances in a manner that even if you don't have an audited account, you can show something that actually speaks to the performance of your business. But the interesting thing is that, and I would like to say this, that we are scaling this technical support further. We are in the process of coming out with a partnership with MasterCard that would enable us scale up the quantum and also the quality of technical support that we offer these SMEs. So very soon, we would start the process of preparing these SMEs from one level to a level where their businesses will be well structured, because we are going to engage the services of business development support consultancies who would go into these SMEs, who would do a thorough diagnosis, thorough assessment of their business structure, their practices, their governance, and so forth and so on. And then advise a proper developmental program that would enable or help these SMEs, be positioned in a manner that can facilitate their growth, now and into the future. So we are going into a more thorough technical support for these SMEs. And we are partnering with institutions like MasterCard, and we are also in talks with other international organizations that have interest in the development of SMEs. So that is the direction that, as a bank, we are going, because to help the SMEs, it is about partnership, strategic partnership. You can't do it alone. There are many institutions that are actually driving similar or same agenda. How can we, as a financial institution, identify these organizations, partner with them, and come out with a more robust program or robust activity or intervention that not only provide financing to these SMEs, but also provide them with the technical support, the skills, the know-how, and also the advice, the right business or relevant business advice that enables them to properly structure, to grow, and then be sustainable. So the emphasis here is how do we help them to be sustainable now and into the future?
If you don't mind, I think it's worth sharing a few guidelines which would be helpful for raising capital as an SME, regardless of whether you're in a pandemic or not, right? So financial management is the first thing that Audrey touched on, and it is worth re-emphasizing. I've met hundreds of companies that are looking to raise money. And I'd say for every 100 that I meet, probably 90% of them fail on the first hurdle of having proper accounts. And this is partly because of the attitude a lot of business people have towards accounts and audited accounts, to be precise. Most of them look at it like third-party auto insurance in Ghana. It's something you do because some authority has told you to do it. It's a compliance thing. And therefore, they'll look for anyone who claims to be an auditor, pay them 500 cedis and say, get my audited accounts for me. I can guarantee you that if you pay 500 cedis for audited accounts, those accounts will never enable you to raise money from a professional investment firm. It would take only 5 minutes for any one of my analysts to rip that set of statements to shreds and demonstrate why it is not a good candidate for receiving capital. So if there's one thing I would advise people to do, it is to keep a proper set of accounts that truly reflect the status of your business. Some people try to hide profits so they don't pay taxes, but guess what? If you don't show profits, you can't raise money, or it's harder to raise money. So pick your poison. If you don't want to show profits so that you can keep the money in your pocket, then you're also reducing your chances of being able to raise patient long-term capital that will not insist on charging you a high interest rate in year 1, year 2, that will be with you for about 5-6 years so you can grow your business.
Yeah. So, Jerry, so when you say that, and I'll let you chime in. I think, did you want, yeah. So Jerry, when you say that, you're basically saying financial statements, so people know where we're coming from. It's not just, having audited financial statements that adhere to local and global business standards, right?
Absolutely. And there's even IFRS for SMEs today, which any auditing firm can basically audit your accounts to those standards. And if you're auditing to IFRS standards, it makes it easier for international investors to assess your accounts and feel comfortable about investing. But beyond just the financial statements, think about the structure of your business, right? A lot of businesses are family owned. Now, I would say that just because they're family owned doesn't mean that they have to be family governed as well. So you look at your board, look at the structure of your board of directors. Again, I'm only going to state the facts based on what I've seen. Based on what I've seen over the last 10 years, when I see a board of directors that's comprised of 5 people, of which 4 people are from the founding family, I see a red flag. Yeah. I'm not saying that family governed businesses are necessarily bad, but it is just very easy to fall into bad habits where the interest of the family goes ahead of the interest of the business, which should be seen as a separate entity. And many family-owned businesses are beginning to realize this and are gradually restructuring their boards to include independent board members, trusted independent board members that the family can trust, who can advise them in an impartial and objective way, and in a way that favors the business over the family. Because these two things do need to be treated as separate entities, right? So there has to be a preference for putting highly qualified people into management roles And even if you're going to put a family member into a management role, let them compete with external parties and prove that they're as good as, or if not better than, those external parties before you put them into management roles. To the extent to which you can do this, you improve the chances of a third-party investor seeing your business as a professionally managed entity rather than one that some would call a lifestyle business, i.e. designed to maintain the lifestyle of the founder or the founder's family. These are all things that a lot of us would see as normal. It's normal that if I'm running a business, my family members should be involved, but which a third-party professional investor would see as abnormal. So these are just a few tips that I'd just like to share for people to help improve their chances of raising capital. Yeah.
Jerry, thank you.
So, Nii, if I can just add on, but just a quick correction. I mentioned MasterCard. It's not MasterCard. It's MasterCard Foundation that we're working with. And just as Jerry said, governance is very important. Having managed SME for quite some time, you notice that most of these SMEs are, sole proprietors. And you can see that looking at where some of them have gotten to, they are at a point where they can easily expand or change their structure to bring on board boards and all that. So we see that they are not actually getting involved in that. That is why we're coming out with a program that would also focus on helping them, with their governance, helping them with their business structure, helping them with their business model so that they can actually grow beyond themselves. We don't want our SMEs to get to a level where when the owner steps down, the business just comes to a standstill or it collapses. We want to see Ghanaian SMEs become generational businesses. So it is one of the key things that we're going to focus on very soon, into the few months ahead and then into the years ahead.
Great. The Ahaspora team, is there anybody else that wants to ask a question? If not, I'll just end. So Jerry, I want to talk more about your limited partners, people that you raise money from. People who are who as financiers, especially in the private equity and venture capital space, don't realize that you yourself have to pitch when you raise a fund, i.e. limited partners, people like pension funds, DFIs, and that sort of thing. How are these, in these times, how are your funders? What is the sentiment you're seeing from some of your LPs, your limited partners, and also the U.S. government has this new DFI. If you could talk a little bit more about that, and if you have any ongoing relationship with them. You're mute.
So the DFIs and these government-related entities have a long-term view and a relatively consistent mandate where they're trying to assist SMEs and assist businesses in conflict-stricken countries and generally push for the growth of Africa's economies through business. So a lot of these firms will not stop making investments. That being said, the nature of their commitments is relatively sporadic. So they make infrequent commitments, but each commitment they make is over a long period of time. So for instance, we are managing capital that was committed, back in 2014, and another tranche of it that came in 2019. So there's no need for them to actually add any more money. So however, in our discussions with them, it's very clear that they want us to continue supporting SMEs, especially those that remain viable in these circumstances. So those discussions are still ongoing, and they all do remain positive. In generally, they may remain positive about Africa in the medium to long term. But the channels through which they invest are mainly through organized funds, and to a lesser extent, they invest directly in SMEs. But it's mainly the larger, the more medium-sized SMEs, the ones that are very well structured. So put it this way, if there's an entity that I would not invest in because I found it too risky, there is no way one of those DFIs would invest in that entity directly. They're likely to invest in those that are slightly lower risk. But in the long term, in the medium to long term, they still remain optimistic. So our hope is that there will continue to be other entities like Injaro that can convince these entities to deploy capital into the region. And ultimately, that depends on us finding great companies to invest in and generating good returns to our existing investors. But overall, the sentiment still remains positive and definitely sort of focused on assisting or continuing to support Africa during this pandemic.
All right, thank you for that. Appreciate it. I forgot to mention mention this in terms of, I think and Luca was saying something about Sengu. But in terms of, he mentioned about hustling, and you can hustle all you want, but at the end of the day, people still need help, right? You can hustle till your eyes turn green, right? If you don't have a network or an ecosystem, you're not going to go anywhere. And that's a good segue to what I was going to say. Right now in Ghana, you have these ecosystems, these co-working spaces, incubators, or all these. This have changed quite a bit in the past 5 years till now. You have the Cosmos Innovation Center. That's more focused on agribusiness. Jerry, that's right down the road from you.
Yeah.
You have the Nest. They've been around for the longest. You have, Impact Hub is more of a co-working space, but now you have these ecosystems in Ghana where people are getting help. You have the Accra Digital Digital Center. I don't know if I'm saying that name wrong, but there's help for you there. There's no excuse now for not getting help, even if you don't get funding, even if you don't get money. Most entrepreneurs, people who have successfully raised money, they'll tell you, I started a business 10 years ago and I tried 2 or 3 times with different startups and businesses. It takes a while before you get the experience and you find the right niche to scale an idea. And especially now with what Sengu was saying, you said that, Jerry, you were saying that Sengu was more of a contrarian. I remember during the 2008-2009 financial crisis, out of that, starting 2011, 2012, we're seeing some interesting services start to percolate. If you haven't looked at the Airbnb story, just Google what, got his name, the founder or co-founder of Airbnb, just I think Fast Company had an article. They actually laid off quite a few employees this year, but I think they're doing an IPO this year. Just look at the story of how they started and the grit and where they came from, because this is a time now. I'm hoping and I'm expecting, and Jerry, I don't know your sentiments about this, or Audrey, but I'm expecting there could be a couple of unicorns coming out of Africa. And for people who don't know unicorns are it's a definition for businesses that can have a valuation of over $1 billion, right? This is what the people in the Silicon Valley or Valley have deemed what a unicorn is. But I mean, we're going to have 2 billion people on the continent next 20, 25 years. People are going to need health. They're going to need services that people take for granted in the West. If you're a diaspora who's coming back to the continent, to Ghana, and you expect a certain level of service that you got in the West, what are some businesses that you can implement? So this is a time to really look at the next 10, 15, 20 years of potential services that you think could happen. And this is the time to do it, because right now there's just chaos. And Warren Buffett said it best. I invest when there's chaos. And I guarantee you there are other people. And Jerry, I'm sure you're looking at this right now too. So I don't know your thoughts to that.
So I'm not quite sure what the exact question is over there.
No, the question is just,
are we going to find unicorns in Africa? Is that the question?
No, it wasn't a question. It was just a thought, and it was just in addition to what Sengu was saying. Sengu was saying that how he was mentioning about there's
hustling.
Yeah, and I said, look, you can hustle all you want, but you're still going to need a little bit of help. And then I said, there's still some opportunity for people to look at potential businesses they can look for it to scale, because based on who you talk to, the World Bank has estimates of there's going to be 2 billion people on the continent in the next 25, 30 years. Well,
Yeah.
people are going to need food, they're going to need health, they're going to need all services that people take for granted. And especially when we have disposable income rises.
Okay.
How do you prepare for that? So.
I think in terms of future business opportunities, my dream is for Africans to be a bit more ambitious than looking only at the African continent. In my view, there's no reason why the next Uber cannot originate from Africa, or the next Airbnb idea cannot originate from Africa. So one thing I would encourage entrepreneurs to do when they're dreaming is to dream about incubating that startup right here that becomes a global phenomenon. We have the know-how, we've got the imagination, we've got the creativity. So I believe that Africans should be able to do this. So the first thing I would say is let's not limit ourselves to the African continent. I'm not saying let's not serve our own continent, but let's not limit ourselves to this continent. I also noticed a question from a Tamanda about how we deal with investors who have different views on what impact is. And this could almost be a trick question. I need to be very careful how I answer this, because I manage two impact investment funds. So I think the fact is, being an African, my view of what constitutes impact or development is slightly different from that of the West. From my personal perspective, and I'm not speaking on behalf of Injaro now, anything that creates jobs, improves livelihoods, and creates a more job-based economic growth, for me, it is positive impact for Africa. So basically, I really care less whether the job is in the agriculture sector, targeting smallholder farmers, or creating jobs for urban youth in Accra, in a tech-based business. For me, they're one and the same. They're all economic activities that are creating jobs and contributing to the growth of our beloved continent. That being said, a lot of investors in the West, depending on the mandates that they have, and remember there's so many different funds, and a lot of them are specialists, and they've been set up based on a certain theory of change. I think this is a term that most of them like to use. They've chosen a specific way that they want to improve life in Africa. So what you might find is that, whereas I might want to look at 5 different ways of impacting Africa through investments, they probably only have one pathway that they want to follow. And this might mean that in talking to investors, the scope of your activity may need to change in order for you to make that marriage between the people or the businesses that need the capital and the sources of capital from the West. So really it is about trying to find those intersections for collaboration. And I hope that answers the question for Tamanda.
Can I come in here?
Sure.
Jerry, you mentioned startups, and I want to add on to that. As a bank, we have seen that there's a surge in the number of startups that are emerging in our country. There are a lot of hubs that we are seeing in this country, and all of them are working, to ensure that startups get stabilized and also grow. What are we doing as a bank? Recently, we launched our startup proposition, and the purpose was to, front in this country, be a force in this country to rally all the stakeholders who are interested in the cause or who are interested in the growth of startups in Ghana. So we've partnered with, most of these hubs in this country. We've partnered with, venture capitalists. So Jerry, I will talk to you after, because I think that there's some synergies, and we could align on some of the things that both of us can do as institutions. So we have designed a proposition or a solution for startups, and it's we open accounts for them for free. We don't charge them for operating accounts with us. We offer services like their debit card issuance for free. We offer their local transfers for free. We offer our online banking platform to these startups for free. They operate with us. We don't charge them commission on turnover, all to encourage them to actually get into the financial system, because to be able to actually get to a point where you need support, you need to find yourself included in the financial system. So we've made it very easy for them to get included in the system. And then beyond that, we are building them up. So with partners like InnoHub, we are helping them to actually develop the right skills. Some of them, they are incubating them. And when they get to a level where they need debt funding, because when it comes to startups, I'm sure Jerry would attest to it that initially you don't really need debt funding because you put unnecessary burden on yourself. So you have to look at the other ways or other means of funding your businesses, to make sure that you don't find yourself in a position where you get so much pressure by the banks to pay your principal and then your interest. So we make sure that all these partners are on board, and we direct them to which institution or which partner that can be of help to these startups. So this is what ABSA is doing in this country, and we still are looking at the right partners to work together to advance the cause of startups in the country, because they are the future, of this country, as SMEs are the future of our economic growth and development in this country.
Well, well said. Well, ladies and gentlemen, we are at the end of our panel. Thank you for joining us and hearing the thoughts. I hope everybody was able to gather information that could help them with raising capital or looking for partners and equity or debt financing. I want to thank the panelists, at least the two left. Jerry, I'm sure I'll see you around. I haven't seen you since last year. And Audrey, thanks again for joining us.